Hello, everyone. We are live. I was meant to do the countdown, but messed that up completely. Hope you're all well on this Friday afternoon. Welcome to this week's episode of the XP Expose live Q&A. If you've got any questions, do note them in the comments on whatever platform you are joining us on. So let's get stuck in. So today we are going to be talking about a project where one of our planning consultants effectively came in to swoop in and save the day. And we're going to be talking about some case law that we used to do that. We've got number 2 on the list, which is a project in Marlow where we are this close to getting planning and listed building consent. And we're going to be talking through that scheme. Last week, I had some of my family round to 4 or 5 of our sites to view them. And we're going to be talking through that. Or I did a photo shoot for the team because our photos on our website need a massive overhaul. We are looking to raise a fund, and we're going to be talking about the history of XP over the last 5 years and what we've raised to date, what we're looking for. We're looking to be introduced to funds and high net worth individuals to work with us on our future schemes. We have lots of valuations coming in. We've got lots of planning approvals over the line over the last couple of months. We've been developing the scheme. So now we are looking ahead and getting agent valuations for those schemes. We have had a good conversation with a very, very big client for XP Surveys. We're going to be talking through the conversation that we had with them. And we are very, very close also to getting another full planning application submitted to further enhance one of our schemes. So stay tuned to see how we've effectively doubled the profit, I think, from 700 grand to 1.4 million on that scheme with the enhancements that we've done. Really exciting one that I can't wait to share. And we will have Jack talking a little bit about the legals process and how he keeps on top of our solicitors having purchased something on average every 4 weeks over the last 5 years. So if you want to be super efficient like Jack, stay tuned to the end. And then Jack's also going to be talking about equity, how that is structured. So if you're new to this, or you want to understand how an equity and debt structure is placed in property developments, then stay tuned to say hello to Jack later. Thanks to those that have thrown in some questions from last week's video. Declan Smith, thank you so much for commenting on YouTube. He wants to understand how we fund our assisted sale type structures. And we're going to be talking through that at the very end of this video. So stay tuned. If you're listening on podcast, because we now have launched this audio onto all of the podcast streaming platforms, so Apple, Amazon, Spotify, Castbox. If you're tuning in on podcast, it's Friday the 28th of July, and this is our weekly update. So let's get stuck in. I'll jump into this one straight away. We had a very, very, my heart sank basically when an email came through last week to say that the planning officer is going to have to reject one of our Class MA planning applications to enhance the old malting scheme from 16 flats to 20 flats. Really wasn't a good email to get, but I threw it out to a couple of planning consultants that we were working with, discussed the situation because we had conversations before submitting this planning application with them to understand the strategy and the risks associated. So we secured Class MA planning application for 16 units, and we went back in with an external works full planning application to get roof lights and windows into areas of the building that currently don't have them, to enable us to get daylight and sunlight into those areas in order to submit a further planning application to get mezzanine levels in, extra additional space in areas that were dead space with no daylight, and therefore enhance the scheme from 16 to 20 units under Class MA permitted development. So we went through that process. We got the approval for the external works package, and we were just waiting the 56 days to get the Class MA application up to 20 units. And last week we had the nasty email to say that it's going to be refused. Luckily, one of our planning consultants saved the day. They sent us a fantastic email with 2 or 3 case law appeal decisions, like the one I'm showing on screen, that essentially said the appeal is overturned and Class MA application is approved, where an external works package full planning application has been approved to accompany a Class MA application. So this was fantastic news. We submitted this to the local council planning officer. She consulted her legal team at the council. The very next day, they said, we accept this. There will be effectively a condition on the planning approval that says the external works package needs to be completed before the works to change use to the 20 units can progress. So really good news. About 2 o'clock this afternoon, had an email from the case officer saying that the decision notice will be out either today or Monday with an approval. So absolutely thrilled to get that over the line. I'm not going to hold my breath until the actual decision notice comes through, but a real win. If you've got the network to call upon, it just goes to show that you can push back on a lot of the planning officers and use case law and appeal decisions to change their mind. Jack, anything you wanted to say on that?
Yeah, I mean, it just goes to say that if you have the right consultants that are working with you, then you can evidently not only save money, but also create value. And I think that's imperative. Don't cut corners when you're trying to create huge value in planning and get the right people involved. So always get the best team on board to support you in that.
Yeah, nice. Any questions on that? Do drop us a comment below, whatever platform you're on. On to number 2. We talked about Marlow last week. This is a scheme through a listed building that we are hoping to convert into 4 flats. The whole building isn't listed. It's just the front section off the main high street. So we are very, very close to getting this over the line. We were back and forth with the heritage officer and the listed building consent because we were trying to remove an internal stair in the grade 2 listed part of the building. Heritage officer wasn't really happy with that. There were too many fabric alterations that we were trying to make. This was one step too far. Sent them photos of the stair, the original stair, and effectively came up with the solution or to present to them to block up the existing stair effectively, to not remove it, but literally just to put a stud wall around it, keep it preserved so that if any time in the future it gets planning approval to kind of change it back from a flat into whatever use it might be and the staircase can be exposed, there's every future possibility to do that. The heritage officer was accepting of that, and there's not really anything else on their list of objections to now kind of appease. So I'm really hopeful that in the next week or 2, we'll see a successful planning approval for this front part of the building to convert it into 4 flats, both listed building consent and full planning approval. They are 2 separate things. If you're working on a grade 2 listed building and you haven't gone through that process yet, there are 2 applications effectively that you are working on simultaneously. There is the full planning process, and then is a separate application for listed building consent. You can actually get listed building consent without planning approval. So they are separate entities. Anything else you wanted to jump in on that, Jack?
No, all good. I mean, it's probably actually worthwhile saying this, the backstory of this deal and why structuring a deal conditionally is imperative. So this was a deal that got brought to us by someone in our network in Marlow. We agreed a conditional purchase on the property, which means we put a nominal exchange fee down, and we are liable to complete when we get satisfactory planning. We went to planning, what was it, probably 12 months ago, and were unfortunately rejected planning because the council didn't want to see a loss of a community asset and a change of use of that office building that we're looking to convert to residential apartments. If anyone had any sense and they Googled office spaces, they would know that there's a surplus in the town centre. And the modern way of working is a lot of people are working from home or working off business parks. So because we agreed a conditional contract, we managed to re-agree an extension to the contract and resubmit planning once we had proven a 9 months marketing representation to show that the asset was not fit for office use. So we're now at our second go, and actually the first time round listed building consent was approved. So a little bit of an easy win, and we've got the bigger battles probably to come. But if anyone wants to know more on conditional contracts and what they look like, we're more than happy to share how we structure them and how we do them. Let's just paint a picture to use a scenario. Let's say we were buying that unconditionally. We would now be about 15 months in of finance costs without planning permission agreed, which would obviously be a huge burden and risk to us as a business. So offsetting that risk as best you can is imperative to building, multiple assets in your pipeline, I suppose.
Nice, good. Thanks for tuning in, Ronan. Enjoy your beer. Speak to you soon. Point number three, if I can get that up on the screen. So I'd really like to know from all of you listening, like, how involved are your family in your business? It's obviously, typically quite a big part of anyone's life when you do run your own business. Last Monday, my dad came up to stay with us, and I took my wife and my son out around numerous site visits. That's his cheeky little smile at the old Maltings, which is our soon to be 20 unit scheme that I was just speaking about. And I'd love to know how involved your family are in your business. It's obviously a big part of Jack and I's lives. So to have, your family there alongside you is extremely important, kind of rooting for you and helping you through difficult times and celebrating the wins when they come. So I just thought it'd be quite nice to touch on the more personal and family side of business. Let us know. And just a quick one to say, we are hiring in Aura Architecture. We're looking for a part 2, part 3 architect. So if you know anyone, please do get in touch. We are refreshing our team photos. We had a good photo shoot this week. We thought we'd take some in front of trees because we are looking to push the more sustainable nature of what we do. And it happened to be straight outside of our office, so it looked good as a backdrop. More on that as the photos get sent through to us. Would you like to kick off this, Jack?
Yeah, cool. So obviously, as you can see, and we are actually coming on to equity later on in the I suppose in the video. But Ben and I have been talking about this for a while, and a lot of people that we network with that are also developers. It does get pretty tedious piecemealing and raising capital for every individual deal that we go and find. We obviously operate a trading company, which is the core and has our team operating within that business. But for every new project that we do a capital raise with an investor who comes along for the journey for the either the profit share or on a fixed coupon position. And we have to build those relationships, get them on board with the scheme and show them the nuances, the ups and downs, the risks, the rewards that we are likely to expect on that project. And we bring them through that process. Now, Ben and I have said, from a very early stage, that we would love to work with a bigger fund that fund all of our projects. They're very diversified in the sense of their location, use type, exit potential, and even more so as we've grown and even added multiple facets to our delivery of our businesses and what we're doing, including our social portfolio, which we've been building over 3 years, our investment portfolio we've been building, our flats, our new builds, our mixed use sites. We've got 7 offices and 7 flats on one site. So I suppose the whole premise of this, and we've been meaning to go out and meet new people and meet new faces, to basically build relationships with bigger backers so that we're not necessarily having to do all of the due diligence on us as a business for every project that we find, and allow us to do what we do best. Essentially, we're not necessarily, ex-investment bankers or the money people. We obviously deal with investors and people that are high net worth investors or our investing partners. But our job and our skill set is finding, funding, structuring, designing, delivering, and selling or keeping those assets. And the more time we spend going for coffees and meeting with, the investor that can do a deal at a time, it's all well and great, and we really appreciate those relationships. But we have actually outgrown some of those relationships that we once had. So for us, it's about widening the net and seeing if there's a facility out there, which I know there will be. We've got, other people in the industry that are doing similar things and looking for similar things, so that we can keep giving a diverse offering across our portfolio and deliver, more than one project with one party. So I'll let Ben hand over and talk about a little bit what we've been up to and his perspective on this.
Yeah, so to date, we've been busy building and developing our business for the last 5 years. In that time, we've raised over £11 million in equity across various partners. We're up to easily above 25 million in terms of debt across the schemes that we've worked on. And over that time, we've averaged an IRR just shy of 41%. That's something to be very proud of, and we're obviously sort of keen to keep progressing that. But like Jack said, we're getting to a point where our business is growing. We have a lot of capacity to do more, and our pipeline is very strong. And we would love to be doing that with fewer parties that have more funds available to deploy into the types of schemes that we're working on. Now, Jack mentioned a little bit about the kind of diversification of the types of things that we work on. We've got a big social housing portfolio, which is more of a securitized income type play with 10 to 25 year leases, excellent ESG credentials for a fund looking for a lower risk profile type investment that is secured for a longer time period. We also have a number of higher yielding HMOs, which Jack and I have been building over the last couple of years. Jack's, I think, separate business Central Suites is up to over 100 beds now in that portfolio. And the IRR in that portfolio is similar to XP's. I think it's something like 36%. So, we are very accomplished at what we do. We've won awards in the past 2-year Property Investor Awards, one for one of our HMOs, and then we actually won Property Deal of the Year for a 14-unit scheme in Oxfordshire, which we are just finishing off as we speak and refinancing. So we can offer a diversified development and investment portfolio, and we're looking to work with fewer individuals with higher funds to deploy to help complete that pipeline over the next 3 to 5 year time horizon. So if you are interested, if you or yourself or your network are work for funds, family offices, high net worth individuals that want to deploy capital into the UK real estate market, we would love to have some conversations with you. Over the next couple of months, we're going to be looking at lining up a number of meetings with potential partners, and we would love that to be you. So if that's of interest, or someone that might be interested, please do share this. Our contact details are info@xpproperty.co.uk, or you can message Jack or I on LinkedIn or any of the other social platforms. Anything else you wanted to add, Jack?
Yeah, and equally, I just wanted to add for, if you're just coming on to, part of our development company and where it is, obviously there's so much that would need to be shared to show what we get up to. But I believe the proof's in the pudding. We've bought 63 projects since we started the business. And we're fortunate to say that we haven't gone into the red on any of those. And that's something we pride ourselves on. And the first part of it was self-funded and self-delivered ourselves. So we believe that we took a punt with ourselves first to show that we can build a tried and tested model, and our team is better and more skilled than it's ever been. And I'm not just saying that as a sell point. I feel like there's quite a few things in our business now that our team do better than me and Ben ever did, which is really, part of growth. And it's good to let other people come in and be better than we were in those specific areas. But yeah, welcome conversations and introductions, and we're more than happy to pay introductory fees if you think you've got someone that might be the right person. We'll see where the meeting goes. We're very honest when it comes to how conversations go and who brought us to that table, and we'll be sure to make sure that they were thanked for that. So looking forward to hearing anyone in our network that might have these contacts. It doesn't necessarily have to be people in property. If anything, that might even be better from a diversification perspective. And we've got some of our best schemes ahead of us, and we can really do some, I suppose, larger support with those projects, because they are the same gig, but obviously bigger numbers.
Yeah, I don't think I actually mentioned that the sort of fundraise that we are looking to go to the market for is £10 million plus. And if that size of ticket is of interest to you, then get in touch. Cool. So on to agent valuations. We touched on this a little bit last week, but because we've got so many schemes coming out of planning and we're running through detailed design on various schemes in front of you, we're now approaching local agents to help us, value those schemes. We discussed valuation packs last week, and if you missed that, go tune into a 3 or 4 minute rundown of how we pull our valuation packs together. These types of agent valuations will be key to the information that we provide in that valuation pack, local up-to-date agent comparables that will show the valuation surveyor, exactly what the market is doing, and can compare and contrast to the values that we are providing to them. Most agents will be more than happy to provide you a schedule of pricing, with the view that you're building a relationship with them and they win the sales off the back of working with you. I know that Jack's built a very good relationship with Simpsons, with Brecken and Brecken on the old malting scheme, so we're working hard with them, and we're always open to building new relationships with agents. So anything you wanted to touch on valuations, Jack?
Yeah, so one thing that's great about valuations is the internal developer and the internal developer out of all of us, we're optimists and we always think we're going to get the best value on the street. When you get a third opinion, that sort of brings you down to reality. And quite frequently, we do this process where we speak to the agent and we don't give them a steer on where we're at. I sometimes do it internally with Dawn when I ask her on the values on the old maltings. For an example, I said, where do you think the value's at? And she said, where are you at? And I said, you put your numbers first and then we'll reveal. So it's always good to get a second opinion because other people see different things through a different light to de-risk those end values and to support your schemes. We've discussed before with the valuation deck, go back and watch that. It was actually last week, but the external third-party valuations that come through to the surveyor hold way more weight than you yourself. Obviously, you're the borrower and it could be a conflict of interest if they believed that you were spot on your numbers. They need to do independent research themselves. And if it's coming from a different source, that really does help. But that's all I had on agents' vals. One thing I probably will say actually is, and I talked about it last night at Brendan's event, is in a property transaction, you have several people involved. You have the seller, you have the estate agent, you have the valuer, and you have your buyer. All of those 4 people will have a different valuation on the property. The closer that valuation is together, the easier the transaction goes through. So when it comes to agents, they tend to be quite optimistic. Sellers want to be optimistic because they want the best value for their property. Valuation surveyors tend to be more pessimistic. So you've obviously got to fight that battle. So if you can work with agents, the optimists, to get the pessimists up, that transaction will be more fluid. So that's just a little bit on the landscape of a transaction.
Nice, good. For those that are just tuning in, Jack and I have been building a company called XP Surveys for the last 3 years. We're a measured building and topographical land survey business who now also offers drone surveys and lots of other things like 360 virtual tours. Go to xpsurveys.co.uk to check that out. But it's a growing business. We're trying to build relationships with people. We've built a very good relationship with one architect in particular, and they've recently brought us the potential for a very large client, which is effectively a £15,000 to £20,000 kind of contract stroke survey for us, which when you take our average survey value of £1,500, that's a big injection of revenue into the business. So we had a meeting with them this week. They had a Chinese translator because the client is Chinese, which is very interesting. Lots of long pauses whilst they translated. But it's a fantastic wedding venue, which we are hoping to scan. They would like the output in 3D Revit. So essentially, we would use the Trimble X7 scanner, which is what you see on screen. We would do a laser scan of the building and surrounding land. We would build a point cloud data set, which is this thing in green, red that I'm pointing at here. We would use that point cloud data, which is a 3D data set that we then import into our CAD software to create a Revit 3D model to then output the 2D drawings into PDF and DWG. If that means nothing to you, I'm sorry. We typically work with architects and property developers. If you want to know more
Don't worry,
about
guys. It doesn't mean a lot. It doesn't mean a lot to me.
So yeah, xpsurveys.co.uk. We're trying to build relationships with architects and property developers. We have an average turnaround time of 6 days. Currently, we can often be on site very next day to actually do the survey and then produce drawings within 6 days thereafter. So fast, reliable, accurate measured surveys and topographical surveys. If you are in need of one of those, do give us a shout.
Yeah. Can you go back one? I just wanted to share a case study. So within our surveying company, obviously we want to be fast, accurate, and a good turnaround time, and obviously good quality. A case study from last week is we had our first booking for someone that paid for a speedy service turnaround. Now, if anyone's got carrying debt on a site or waiting to go to planning, it's a great service to have. And that's why, being run by developers, we believe that we're offering things to the market that are wanted. So anyway, so a client booked our speedy service. They went through our online quotation tool, which is free of charge. You don't need to pay to get a quote from us, and it's immediately quoted. They then paid for the fast turnaround service. Ben's just pulling up the quotation tool now, and we were on site and got the from on site to turnaround. We actually issued the drawings within 2 days. So that's our team plotting up the full output of the drawings and sending them to the client within 2 days. So we are quick, and that client was obviously very pleased to get the speedy service as a speedy service. So if there's anyone out there, maybe you've got a quiet summer coming up and they need a survey done, do let us know.
Cool, good stuff.
You can go back to we got a question as well.
Yeah, I was going to leave that to the Q&A at the end, but yeah, thanks, James. We'll definitely touch on that. I mean, this is the project, so actually maybe we can bring this up.
Yeah, let's
Thanks for your comment. What was the battle plan without the MA case law knowledge of the planning consultant? Yeah, we'd always gone into the scheme sort of fully understanding that we were in the right with how we what we were saying was true in terms of the external works package should be acceptable with the class MA. The fallback position would have been to get our contractors on site ASAP to install the roof lights and the windows. So implement the full planning application to add those external works. Once those were physically on site in the existing building, we could then resubmit the class MA, and it would have been approved. So we did ask the planning officer to potentially hold the application live to give us a chance to do that if the case law wasn't accepted by the local council legal team. So yeah, fallback position probably would have meant that we'd lost 2.5 to 3 months. But yeah, we pushed back, we got there. These things are sent to try you, but with a good network like we discussed earlier, and good knowledge to tap into, it was great to get that one over the line.
Good question though.
Yeah, thanks for that one. Next steps on that project is full planning. Jack hasn't necessarily seen this sort of grey 3D model on the right hand side. There's still some finer tweaks to be done to this, but it's starting to look really sharp. We are in the process of creating some CGIs to submit a full planning application to take those 20 units that we have under class MA into 23 units. And to do that, we are looking to add a new build element of 2 townhouses on the right hand side here, increase the value of the existing flats by adding some balcony space to the side of the building. And what I'm not showing you in this is the front elevation, which we are completely redoing and building a new brick facade, which allows us to get an extra unit squeezed into the sort of loft space at the front there, whilst removing a very, very ugly glass and steel frame canopy off the main road. So stay tuned for more as that unfolds. I'm really looking forward to seeing the CGIs come together. I think this courtyard could look really, really smart. So stay tuned.
Good. I'm going to try and not bore you all with this topic, because it does sound boring, but I can guarantee you it drives your business in the right direction, especially if you have multiple transactions going on at any given time. So legal's progression, other than the topic that we've just been discussing, which is planning, I'm sure there'll be a lot of hands going up if I said who agrees that legal and solicitors are the next slowest part of a property transaction. So after this was actually, I'll tell the story of why this spurred on. We were buying a site, and the employee that was part of the legal firm that we were buying it with, as in our solicitor, ended up leaving without any notice for unforeseen reasons. And I was a bit concerned because we had multiple transactions going through. So what I did was I outlined every transaction that we had going through on an Excel sheet, its status, what date we need to exchange, what date we need to complete. And this could be for purchase or sales. It doesn't have to just be for purchases. And then we would put the point of contact at the solicitor's firm, their contact details, and then our comments of that transaction at that stage. So this is basically just lining up everything that you have in legals at any given time that you have on one sheet. Now, what do you then do with that? Frequently, I then send it over to the solicitor to discuss the comments that I have, to make sure we're chasing the sellers, holding back if we need to save a bit of time, requesting documents if they're needed, de-risking it, whether it's got a restriction, covenant, or planning, or whatever it may be. And then they give me their comments back. You can do this via email them weekly, fortnightly, monthly, or you can get on a Zoom call with them and go through it line by line. And I actually much prefer the Zoom call. So if we've got a lot on, I try and speak to our solicitor once a week. And then you know exactly where you're at with everything that you're doing. It's a huge deal saver for us, because sometimes we need to be quick. Sometimes we need to slow down a few things. And a little bit of that control is what's needed. And, quite frankly, our solicitors aren't that easy to get hold of. Even though we're the ones paying the bill, but when it comes to the end of the week and they've got completions happening for us and other clients, is extremely busy. You saw on that sheet, that is a live feed to how many deals we have in legals. I think it's about 15 things in legals, I think about 8 transactions, and about 2 or 3 refinances and 2 or 3 sales. So it does get busy. So if anyone wants that template, comment legals template and I'll email it over to you. So if you just comment that, and I will contact you and get your email address, happy to share that Excel, and then you can be on top and in control of your solicitors. Cool. Last but not least, we I suppose we're going to the Q&A after this, but equity. So I was fortunate enough to chair a panel at Brendan Quinn's property event yesterday, which was property people under 35. So we had a really eclectic mix of expertise and skills and strategies on the panel, including Rosie Cassidy, Tristan Garton, and Jim Cross. And the most frequently asked question was about equity and what people are paying in equity. So I thought I would share that with you, given that, one, we've just done a chat about raising an equity fund, or raising some equity fund capital, but also to sort of relay what we heard last night, so that you get the benefit of hearing that without leaving your home, because we're very forgiving like that and want to take care of our listeners. So when it comes down to equity, there's normally one form that we tend to do, which is we work on a partnership with an equity investor, where it's a profit share, or the alternative is just a fixed rate of equity that we provide. You can see them on the left-hand side here, a capital stack. Senior debt is the bank lender. Mezz debt is something that sits above the bank and between the bank and equity. That tends to be anywhere between 18 to 25%. And then you have the equity piece, which can sometimes be referred to common equity or preferred equity, but let's just call that equity for now. So that's the bit the investor's coming in for just a fixed return, which tends to be, to some degree, however the project goes, the borrower is liable to pay that investor back their fixed return, or alternatively a profit share. We mentioned earlier in the call, our average rate of return annualized is about 40%, and we tend to pay anywhere between 12 to 20%, depending on the deal, the risk, and how much we're borrowing on that sort of stack. The reason I'm sharing that is because the question in the room was, what are people paying, what are developers paying for equity? And I found it really interesting, actually. So without naming who said what, and obviously this is subject to the deal, the borrower, the terms, and evidently this is just going from the conversation that we had last night. The developers, the 2 other developers that were in the room, tend to pay between 15 and 25% per annum, depending on it, whether it's a fixed coupon or an equity share. So that's just to give you guys a bit of an update of where the borrowing is in the market for equity. Obviously, if you're backing a good developer that are good at what they say they do, hopefully you're increasing your rate of return on that. But I thought that would be relative to share. Good. Anything else on equity, Ben?
No, you covered that. That's good. The Q&A. So, we like to get questions in from you guys. It helps us keep us nimble and give you guys exactly what you want to hear. If you've got burning questions and problems in your business, we want to know what they are, and hopefully we can help address them or tell you our experience with them. So thank you very much, Declan, for messaging on last week's episode. And the question for those that are listening on the podcast essentially is, how do you fund your assisted sales? Are you able to fund the construction costs for the assisted sales from some sort of development finance? If you do fund these with bank finance, how do you structure this in terms of the bank securing their loan to you on a property you do not own? So very, very good question. I thought I'd bring up a project that we have done an assisted sale on. So this is in Basingstoke. This was a 5-bedroom house that we converted to 2 3-beds back in 2020. And you can find more details on our YouTube channel. There's a full sort of walkthrough on some of these to show the process that we went through. But effectively, this was a property that the seller couldn't sell. He got planning approval already to convert a 5-bedroom house to 2 3-beds. Couldn't sell it at auction, couldn't sell it on Rightmove, just no market for it, maybe because his expectations were too much. So effectively, we came in and offered what he was asking for. So I believe it was it 425? 425, I think, wasn't it?
45, yeah.
420, yeah. So 420, and
that long ago.
There were no takers. So we said, look, we'll give you 420. But we want to work with you to add the value to the property to sell at a higher rate and split the profit. So we locked in the 420 for him, about £100,000 brought to develop the scheme. And I think we achieved £640,000 in sales for the 2 houses. So the profit margin was split 50-50. So the seller walked away with about £475,000 for something that he couldn't sell 6 months before at 425. So he's winning, and we're winning because for our time over 5-6 months, we've taken a good profit and made a good return on our time as well. So that's effectively what an assisted sale is. The interesting thing about this particular project is when we were saying we were going to be bringing the construction costs from an external investment partner, the owner essentially said, can I just fund it for you and take that interest rate of return? So we gave him a fixed coupon on effectively the construction costs, which is sort of known as vendor finance. And we brought 0 cash to the scheme. Anything else you wanted to say on that, Jack?
So I believe there's 5 ways to fund an assisted sale, which is basically, obviously, as Ben said, where you're partnering with a property owner, but you don't actually buy it off them, you just joint venture with them. Ben has mentioned 2, which is vendor finance, which is technically their cash or their cash reserves, and investor that we would be bringing. So there's the house owner and the developer. So the 5 options are vendor finance, which is cash, which Ben mentioned, an investor brought in by the developer, which is again probably cash. Third one is the developer themselves. Central Suites have just finished a assisted sale where we funded the bills ourselves. The 4th option, and probably the most complex to get security, is a bank. So we've seen assisted sales where someone owns a bungalow with a plot of land next door, and they sort of slice off the plot of land, and then they get new bank finance on the plot. That is another option. A friend of mine, Steve Masters, actually did that. And then the 5th, which I actually, Ben, and I haven't told you about this one, I thought of the other day off the back of Central Suites delivering ours. I think one of the best ways to do an assisted sale, if you want to be really, really creative, is actually get the builder to pay for the build costs to do the build and agree to pay them on sale, but give them a little bit of a buffer for that inconvenience of waiting for the fees. So the 5th and final option, which we haven't done yet, but is just an idea that I had a few weeks ago while I was probably struggling to sleep, is your builder could actually be the one that funds the construction.
Interesting. Good. So some of the other questions that he asked, were about the sort of funding structure. So the owner did have to refinance. So, I mean, effectively, when you're doing an assisted sale, you're doing works on the property. If you've got a mortgage on it, that mortgage will need to be bought out with a development finance product, unless the lender is accepting of the works, which most aren't. So there will be an element of refinance. Yeah, how do you fund these with bank finance? How do you structure this in terms of the bank securing their loan to you? Yeah, I mean, effectively, the bank loan is secured against the asset, which the owner will have to accept, really. Does that make sense?
It's not easy to fund an assisted sale with development finance or bank finance, unless if it is a commercial plot of land or something that you can slice off, you can create a transaction, still give them the same security, but then get debt against that site. So it completely depends. If it's just a house, I would definitely recommend vendor finance, developer funding it, or an investor.
Great. Cool. I think we've come to the end of the conversation, unless there's anything else from you.
No, all good from my end.
Great stuff. Well, like I said earlier, this will be on podcasts across Spotify, Apple, Amazon, and Castbox. If you're tuning in on there, welcome. I know that a lot of people don't have the time to watch the videos, but love to listen in on podcast in the car or on the way to work. So if that's you, thanks for listening. If you've got any questions, drop them down below. We will be checking in on comments over the week and releasing some and discussing them next week. Tony, I've just seen your question. How do you manage seller opinion on what should or should not be upgraded? Let's go through that next week. Thanks, everyone.
Cheers. Bye-bye.